Oh, happy Friday to you. Thank you for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. And well, we're about to the end of the week, and it has already been an adventurous week. Right in the middle of harvest, and a lot more going on in the markets than you would usually expect to see this time of year. I want to welcome aboard Mr. Brian Hoops, the president of Midwest Market Solutions in Springfield, Missouri, and we'll chat a little bit about the market activity. Now, as we get toward the weekend here, Brian, I want to go through these prices, and I want to get your take on what in the world we're looking at here. So let's go through the overnight trade. We'll start with this corn market. Our quotes are provided by Bar Chart. December corn, a little slippage here overnight. We're down 5 cents, Brian, at $6.79, and that is off of our overnight high by about that much, by about a nickel. So 5 lower across the board on the corn. On the soybeans, well, they kind of had a flat tire. We had November going down 14.5 cents at $13.77, and January down 14.75 at $13.85 Not that far from the low of the overnight trade, within about a penny and a half or so. That would be off of our overnight high by about 14 cents. So kind of gave up the ghost on the soybean trade overnight. Sorry, Janet, that was a little Halloween reference there. All right, let's take a look at the wheat market in Chicago. December down 13.75 at 835.5. A couple of pennies off of our low of the overnight trade there, off our high by 16 cents. In Kansas City, you had December going down by 17 cents at 932.75, and in Minneapolis wheat, the spring wheat market, we had December down 11.5 cents at 951. Oh, by the way, in the cotton market, we have December showing the last trade of 77.61. That's up 21 points. All right, Brian, so a lot of weakness here in the overnight trade. Does this show something going on in the big fund movement, the investment money moving in and out of the market right now, or is there maybe, am I overthinking it or what?
Yeah, good morning, Marlon. I think you're probably on the right track. We'll have commitment traders this afternoon that'll give us an update of their positions. But what I think you're seeing overnight here in soybeans anyway is a reaction to today's option expiration for the November contract. Now, that's one of the most widely traded option contracts that we have, and it expires today. So there'll be a lot of positioning about on that close today. Traders getting repositioned with their options expiring. Plus, we just contending with logistics snafus, and they continue to build. We were not able to ship product down the Mississippi River, and if you are, it's at a much more expensive. So while we've seen some soybean sales this week, just a couple of cargo sold on Thursday, it's been a relatively light week, and so next week's exports will be slow, and we would expect that pace to start to slow down as we go further here into November, and the river situation doesn't change. Now, that's going to widen bases out in the eastern corn belt for both corn and for soybeans. In the western belt, where the product is going to be a little bit tighter and there's more feed usage, we're going to see a product being shipped or trucked across the country to get there, but there's a high cost in doing that. So it's certainly going to weigh on our basis. It's going to drag the futures market down. And it felt like this rally in soybeans was kind of just a corrective type rally because we were going to see strong export sales on Thursday morning. We did, and then the market has pulled back, looking ahead into the future. Plus, wheat market being down, probably dragging corn and soybeans, because we have the rain in the forecast for Tuesday, Wednesday of next week. That's the best rainfall chances that the hard red winter wheat plains areas have seen this entire fall.
And from what I heard, the amount of soybeans that were purchased by China and maybe those unknown destinations here in the last day or two, they were likely booked from the Pacific Northwest to avoid all that Gulf situation. It's actually cheaper out of the PNW now. So you have to factor that in too. Brian will be back in a moment, and we'll chat a little bit about the livestock trade on a Friday when we come back. Well, now let's talk with Brian Hoops about our livestock trade. Brian, did we have much in the way of cash cattle trade this week or not? From what I've heard, it was pretty light yesterday. What do you think?
Yeah, it's been fairly active, but it's been included Tuesday, Wednesday, and Thursday of this week. So any one day, we're not seeing a huge volume, but it's been a decent week as far as volume goes, and it's been at higher money, better than expected. We came into the week thinking steady to $1 higher. We've seen $3 higher trade in the Southern Plains at 148. We've seen $2 to $4 higher on a dress basis in the north. So very a good, strong cash markets, fueled in part by the product values bottoming this week and trying to move higher. Now, I think the trade will be closely watching midday cutouts because last night the cutout values were mixed and didn't show a lot of strength. So if we are mixed again today, we could see maybe the markets pull back a little bit. We've had really strong run here in the futures this week, and we haven't hit contract highs, but we're getting close or knocking on the door of that. We also have a cattle on feed report this afternoon. It looks to be somewhat friendly for the markets with lower placement numbers, lower on-feed supplies, and bigger marketings than a year ago. So all that adds up to stronger cash trade, and really that's what's fueling the futures market here. We're following the lead of the cash markets, and next week we're called steady to higher once again. But I think we really have to watch these product values. If they show signs of a top or at least peaking at this time period, we could set that cash back to maybe steady next week.
Yeah, the market does look a little toppy here. Looking at those beef cutouts yesterday, choice cuts were 23 cents higher at 253.62. But as you mentioned, they were mixed, with the selects going down 11 cents at 222.08. Have they peaked out? That remains to be seen. The choice at 253.62. We would compare that to the value about a week ago when it was 246.53. So yeah, they have had a pretty steep rally, gaining about $7 from a week ago here on the choice cuts. Let's review where we finished up yesterday on the livestock trade. Let's go to the futures board. Our quotes from bar chart show that we had December live cattle finishing 32 higher yesterday at 151.67. Kind of a slow day, actually, overall. Now, if you look at the feeder cattle trade, now here you had the November contract 52 lower at 177.55. On the lean hog market, we finished up the session yesterday with December down 35 at 87.02, but all the other months were a little higher, led by the deferreds. Any penny call guesses this morning, Brian?
I think you're going to see a little follow-through buying in the cattle market, but probably more of a steady type opening. Probably the same thing in the hog market, just some real choppy type trade early in the session. Not a lot of direction coming out of really any news features this morning to give the trade that direction, but the cattle, I think, probably stay firm at least into the mid-session.
Very good. All right. Well, thank you, Brian. You have a terrific weekend out there. Brian Hoops of Midwest Market Solutions with us here on a Friday morning. Janet, we're about ready to kick this thing off today.